and welcome to JIB CIB English Medium. My name is Sia. Hope you all. So, if you're also planning to clear your CIB and JIB in your first attempt, then do follow because in this session we are discussing MCQs. Along with that, you can do your practice and you can clear your concepts. So, what you need to do? Subscribe this channel, share the sessions, and like this so that in future continuously you can revise it. So don't forget to join every day at 7:30 p.m. for your JIB and at 9 p.m. for your CIB. So let's start today's session. But before I start, let me tell you, if you have any confusion related to CIB, related to, we are always with you. Now, how you can connect us? On your screen, you can see one number 09240 231030. This is the number through which you can clear all your doubts related to your JIB, related to your CIB, even if you're planning for your bank promotion exams or any IIBF certification courses. So make sure you are using this number and immediately clear your doubts. So let's start today's session. First question on your screen, you can see that is on 16/6/22, P draws a bill on Q for 1,25,000 for 30 days. Now, 19th July is your public holiday. You need to calculate your maturity date of the bill will be. You have 4 options now. How to calculate maturity date? See, this question is based on your bills of exchange unit. Yes. Now, in this bills of exchange, we have one supplier. Yes, we have one buyer. Now, the supplier is known as your drawer. Before discussing and telling you final answer, let me tell you few important concepts behind it. Okay, so here you have drawer and here you have drawing. Correct? When supplier sells the goods, yes, or provide any services, as a buyer, we have what we have here, obligation to pay the cash. Yes, we have obligation to pay cash. Yes or no? And with this, if you are purchasing goods, you pay the cash, transaction completes. Yes, there is no obligation as a buyer on you, and on a seller also there is no further obligation. Yes, transaction completes. But in this particular situation, we are saying that as a buyer, we are not paying any cash. We are not paying any cash. Then what we are doing? Let me tell you. In place of cash, we are purchasing on credit. Yes, we are purchasing goods on credit and we are saying we will pay after 1 month, 2 months, whatever situation is. Now, as in this situation, drawer will face some, fear and problem that what if drawer, denies during the due date, or if he denies after 1 month about this transaction, so he will see the loss. Yes. So to secure that situation, to secure that transaction, here drawer prepares bills of exchange. Yes, here drawer prepares bills of exchange. Yes, on behalf of drawer, where drawer will accept that bill. That yes, I will pay you after 1 month, whatever promise, whatever agreement they are going to make. So they will create one instrument of credit, which is your bill of exchange here. Now, when we talk about bill of exchange, in this we can see there are due dates. Yes, like I'm saying 1 month. So 1 month after this drawer, Mr. B will come and that person will pay the cash. But when we read your bills of exchange now, we need to provide always 3 days of your grace period. Always we need to provide 3 days of your grace period. Everyone, every time 3 days, every time you need to add. Yes, so as per this situation, they are saying you are drawing for 30 days. Yes, so or you can say here 30 days. Okay, now how to calculate days? Your date of bill is equal to 16/6/22, and this 6 is your June month. Correct? Now in June, how many days we have? We have total 30 days. This is your total 30 days. Now already you are making bill on 16th, so you need to just subtract 16. Now how many days? 30 minus 16 means 14 days you will keep that bill. Yes, you will keep that bill, है ना? from 16 up to 30 you will keep, but this bill is for 30 days. This bill is for 30 days. So currently you got 14 days, but we want extra. 30 minus 14 means from your July we will use next 16 days. Okay, 14 days from your June, 16 days from your July. But as I told you, always you need to add your grace period. Yes, so this 16 days, yes, means 16th 7 2022, that is your date of maturity. Yes, that is your date of maturity. Oh, sorry, that is the date of expiry. Yes, this is the expiry of your bill. This is the expiry. But always you need to add 3 days of your gross period. Okay? Sorry, this is your grace period. I'm so sorry. This is your grace period. Okay? And always it is equal to 3 days. So which is 16, yes, 17, 18, 19 means 19th July 2022 is your date of maturity. Okay, though they are also giving 19th July is your public holiday, but it's your duty to always calculate before selecting your final answer. Okay, might be they are giving any extra information. Yes, so now they are saying this 19th is the date of your maturity, but if this is your public holiday, so in case of public holiday we will collect our we will collect bill previous day. Okay, now what are public holidays which are already known by everyone? For example, your 26th January, yes, 15th August, correct, 2nd October, Sundays, all these are your public holidays. Now in this situation, yes, in this situation you will take previous day and you will collect the amount previous day. But in case of emergency holiday like COVID, okay, then in case of such COVID or any all of a sudden strike, you will collect that bill next day, because no one can predict. Yes, otherwise in every situation on the date of your maturity you will collect it, but in these two cases, previous day and next day. So they are saying 19th July is a public holiday. So maturity date will be what? 19, 18, 19 is your public holiday. You cannot collect on that day. 18, 17, none of the above. So in case of public holiday, previous day. Correct answer is your answer B. Yes, everyone. This is how we need to calculate, and we also discussed the theory which we are using here. Okay, coming to next question. Which of the following statements correctly describes the net present value and internal rate of return methods? Now you have two methods, NPV and IRR. Yes, NPV and IRR. Now these two methods you can use in case of time value of money. Yes, means you know it that in future there will be your inflation, there will be risk, there will be uncertainties. So based on every factor, we are going to adjust our future cash flows. Yes, here you will adjust your future cash flows. Correct? So as per this, you will say both NPV and IRR are non-discounted cash flows. This is totally wrong. This both are your discounted cash flow methods. Non-discounted means as a layman we directly calculate, add future incomes. That is what non-discounted methods. Then NPV is no answer is not B. I'm just selecting that. Next is your NPV is preferred for mutually exclusive projects, while IRR is best for independent projects. No, this is not any criteria to describe this NPV and IRR. See, both NPV and IRR account for the same time value of money. So here your correct answer is NPV and IRR account for time value of money, which is your right answer. So NPV used for short-term projects and long-term, no, this is not your classification. Correct answer is your answer C. Okay, next. The rebate on the bill shows that it has been endorsed, it has been paid after the date of maturity, it has been paid before the date of maturity, none of the above. Now as per this, you need to tell me what is rebate on the bill. Now let me tell you what is this situation. Yes, everyone. So now let's talk about what is the rebate. Yes. Now rebate means what? Is one condition. So let's discuss about it. As I told you, when there is a supplier. Achha, now we are not going to use supplier word. Okay, now because you know it. Supplier is known as your drawer. Yes, and buyer is your drawing. Correct? We have these two parties. Now drawer, you know, sells all the goods and services, and along with this they are also creating bills of exchange on your drawing. Yes. Now suppose bills of exchange, that is validity of this bill is equal to 2 months, and amount for of this bill is equal to 1 lakh. Okay, means this drawing will pay 1 lakh amount after 2 months. But here you can say that drawer also wants to continue their business. Hana, they also need to purchase goods, raw materials, all this stock they need to purchase. So they require cash, correct? So suppose here is one supplier who supplies goods to our drawer. Let's drawer name is your A, drawing name is your B, and here your supplier name is your C. Yes. So here when drawer purchases goods from this supplier, in return again drawer needs to pay the cash. Yes, but because no amount received from the buyer, he cannot pay any further cash. So what he will do, he will use this bills of exchange which he created on this drawing, and this bill of exchange he will transfer to Mr. C. What he will do, he will transfer to Mr. C. Yes. So when you transfer bills of exchange to your third party, that is your endorsement situation. Okay, that is your endorsement situation. Now, okay, I discussed one term, that is your endorsement. I'm so sorry. We need to discuss one more term here, that is your rebate. Okay, that is your endorsement. Sometimes we get confusion between this endorsement, so that's why I discussed here. Now there is your rebate situation, means again is your drawer. Correct? Same example we are going to continue, Mr. A, and here is your Mr. B, that is your drawing. Yes. Again this drawer supplies goods, and in return drawing promises to pay, or says that the bill or payment that person will do after 2 months. Same thing, that is bills of exchange equal to 2 months, and amount equal to 1 lakh. Yes, these are the things. Now here suppose you can see bill on 1st April. Yes, 1st April, and bill for 2 months. So this is your 1st May, and it will expire on 1st June. Hana, this is your expiry. On this day, this Mr. B needs to make the payment. Correct? But if Mr. B pays due before this time period, means before this time period anywhere, if Mr. B makes the payment, suppose Mr. B makes the payment on 1st May. So that is before expiry. Yes. And if Mr. B makes the payment before expiry, yes, so he will pay 1 lakh rupees. But because he paid earlier, here drawer will give discount, and that discount is known as your rebate. Because of early payment, some benefit you will pass on, like 2,000 you said is your discount, and just pay 98,000. Yes, so this 2,000 is your rebate. So rebate is what? That is endorsed? No, endorsed is this situation. It has been paid after maturity date? No, this is paid before maturity date. So correct answer is equal to answer C. Yes. Next, on 1st/1/22, XA draws a bill on YB for 1 lakh. At maturity, YB requests XA to renew the bill for 2 months at 12% per annum interest. Amount of interest. Okay. So here we need to calculate amount of interest. Your bill amount is equal to 1 lakh. Yes. 12% interest you are going to pay, and 2 months you are giving more extra time, more time. So this is your 1 lakh into 12% into 2 divided by 12. So discount amount, this interest amount is equal to answer A. Okay. So renew the bill for, yes. So we calculated this interest for new bill. Yes. Now, next question. Original cost 12,60,000. Salvage value nil. Useful life 6 years. Depreciation for the first year under the sum of years digit method will be. Now, as per your depreciation methods, if we see, there are 4 methods. Okay. A, that is SLM method. B, that is your WDV method. C, that is your units of production method. And D, that is sum of years digit method. Now they're saying for this sum of year digit method. So in case of sum of year digit method, first we need to calculate sum. Okay, this is the first step only. You need to calculate sum of all your years. So we need to calculate this years into 1, second year, third year, fourth year, fifth year, and sixth year. Okay, add all these years, 1, 2, 3, 4, 5, 6. Total is equal to 21. Yes, so here for depreciation, you will start calculating from backside. Okay, means from your last year. You will calculate for first year depreciation, that is 12,60,000 by 6 divided by 21. So 12,60,000 into 6 divided by 21 means first year you are going to charge depreciation, that is 3,60,000. Yes, because next year you are going to charge, yes, 12,60,000 into 5 divided by 21. 12 into 60 into 5 divided by 21. That is your 3 lakhs. So as per your depreciation, value of depreciation needs to fall, yes, as you use that machine. So here for first year, your answer is equal to answer A. This is how we need to calculate within 2 steps. Take a first, take a sum of all digits of your year, then take your last year for first year calculation. Okay? Chaliye. Next. Now this is your homework question, everyone. Now it's your homework question. Please solve this and share your answer. Yes, everyone? Chaliye. So if you have any further query related to any particular topic, or if you want to discuss any topic, you can join my Telegram group. Even link is given in our description box. You can use that description link. And remember one thing, for crash course, okay, if you want to join, already we started our crash course for AFM. So for that batch, you can use Y895 so that you can get maximum discount. This is our coupon code through which you will get maximum discount. So don't forget to use it. And for any further query, you can call on this number, that is 092402 31030. Yes, this is your helpline number through which you can talk directly to the experts. So with this, I'm winding up this session. Thank you everyone for joining. Take care and bye-bye.